Good morning. It's Thursday, September 12th, 2013. I'd like to welcome everyone to our live Ask the Analyst webcast today. Thank you for joining. My name is Chris Grams. I'm with CME Group in Chicago, and I'll be moderating this morning's discussion. I've invited two grain experts to provide their outlook ahead of this morning's USDA's crop production and WASDE reports, and excited to get them started. But before I do, I want to just remind everyone who's watching us live this morning that you can submit questions for our analysts at any time throughout the broadcast. Please look at the lower right-hand box in your display, and you could submit questions, and we'll ask our analysts as we go along here. Also want to remind everyone that an abbreviated portion of this video is going to be available. This webcast will be available at our CME Group TV YouTube channel after this. That's youtube.com/CME Group TV. So at this point, I want to briefly introduce our experts. On my far left at the end of the table, Mike North. He's a senior risk management advisor for First Capital Ag. For nearly 2 decades, Mike has worked with production and processing clients to construct marketing plans and margin management programs. He's the chief advisor of First Capital Ag's 6-step plan and uses his experience to educate businessmen about the tools available for price protection and risk management. Mike began his work in the futures industry in 1995 as an intern with First Capital Ag, researching the technical and fundamental dynamics of commodity market history and current price trends. Prior to that, Mike grew up on his family's dairy farm in southeast Wisconsin. His lifelong interest in agricultural production led him to the University of Wisconsin, Platteville, where he received his Bachelor of Science degree in agribusiness with a minor in dairy science. Thanks for joining us this morning, Mike, all the way from Platteville. Rounding out our travel to Chicago edition of this morning's report is Alex Norton, who's to my immediate left. He is in research for Beeson and Associates and joins us this morning from Louisville, Kentucky. Thanks so much for joining us, Alex. Alex specializes in research for Beeson and Associates, Inc., possesses a firm grasp of the commodity markets, provides dynamic market studies and price outlook, which help to shape client recommendations. Alex's knowledge and market research make him a key resource for commodity analysis. Alex joined Beeson and Associates in 2008 after working with the Lash Group in Charlotte, North Carolina, a healthcare consulting firm, and he holds a BA degree in economics from Wake Forest University, currently earning his MBA from the University of Massachusetts. Gentlemen, before we get started and let you kick off, we've had a very dry and hot August, which may or may not have impacted some crops in the key yield producing time frame. Wall Street Journal survey suggests that other analysts believe that there could be some ratcheting down of expectations by USDA today, in particular in soybeans and in corn. So I know that everyone will be interested in your point of view this morning. Mike, why don't we go ahead and start with you? We'll be interested to hear what your thoughts are on the corn crop for both the crop production side, but also if you have any thoughts on supply and demand as well. Mike?
Absolutely. Well, you hit the nail on the head, Chris. If you go back to the July report, there was this great thought of huge crop. In the August report, we had estimates that were hovering around 160 bushels from the private sector. Certainly the month of August has trimmed some of those guesses. On record, precipitation in Illinois, Iowa, and Indiana is the lowest since 1895. So that is why we're at this point and why the conversation is what it is. Corn prices in harmony with beans have rallied 60 cents as a result. So let's talk about production here for a bit. At the moment, the average guess from the 28 analysts that weighed in on it comes in at 153.7, which is 0.7 bushels down from the USDA's August number of 154.4, and certainly 6 to 7 bushels lower than what the average guess was a month ago. Looking for that crop to be somewhere in that neighborhood of 13.6. That's the average analyst guess. USDA August estimate 13.76. So some reduction there of 143 million bushels. They are conceding that the dry weather certainly did trim the yield and are looking for a shrinking of the balance sheet. So as far as the balance sheet is concerned, when we talk about the final numbers and how we arrive at that ending stocks number, you know, we're looking for some trimming there. The average guess takes us down to about 1.7, down from the 1.8 and change number they gave us last month. I think there's going to be some adjustments made there. As you break things down and take a look at the three big categories of exports, ethanol, and feed demand, there are some places where some questions need to be asked. Exports, if you look at where we stand relative to last year, everybody's going to point to the accelerated pace that we've had in exports, and they're going to try to make a case that exports should go up. However, if you really break it down and look at it by the numbers, our traditional clients are already booked up out through about February. We have a price disadvantage in the marketplace right now that is somewhere in the neighborhood of about 25 to 60 cents a bushel on the world market. And that's why we haven't seen very strong export. This morning's numbers right at the bottom end of expectations, just over 300 million bushels. Brazil's raised their expectations from the coming crop by another 1 million metric tons to 81.3. Ukraine's up to 26.4. We've seen China raise their numbers to 215 million metric tons, which Landworth came in about 2 million underneath that. USDA showed us a number 4 million short of that last month. Not to mention, China has reduced their usage numbers and are projecting a usage of 199.8, which trims their needs again. So bottom line on the export space, we're just not covering the ground that we need to hit their numbers, and I expect that they're going to trim those back closer to 1 billion bushels over time. I think on this report, in balancing out the reduction on yield, it's possible that we could see, like last month, another 25 million, maybe 50 million bushels come out. And that's where I think some trimming can take place. Ethanol, another biggie. We're talking right now about 5.1 billion bushels. I think there's room for us to work this number back down closer to about 4.74. EIA came out this week with projected numbers for next year's gasoline consumption, 8.66 million barrels. You work the numbers backwards, and ultimately that suggests 4.74 billion bushels of corn usage. So at the end of the day, I think there's some room to trim that from the 4.9 number that they're giving us right now. Feed side, same thing. Right now, if you look at year over year, we've increased feed usage on corn by 650 million bushels. That represents a 15% increase in corn usage. Now, if you recall last year's drought scenario, we ended up with a whole lot more wheat being fed to cattle, and they've subtracted 110 million bushels in concession to the greater corn usage. However, if you look at a wheat-adjusted number, we're still 12% greater on feed usage. I think we have to ask ourselves the question, where is this additional demand going to come from? Given the quality of corn coming in, it's likely that we're going to get better feed efficiency, and likely the increase is more like 5%. So a 4.9 number is more likely there, so we can trim another couple hundred million out of the feed number. And as it is, you know, looking at this report, I think it's going to be really, really difficult to create a scenario that suggests a need for rationing or higher prices. So my outlook for the report here this morning still has a bearish sentiment about it, and I'm looking for, even if it's a neutral report, a lot softer response in the trade this afternoon.
Thanks, Mike. Alex, we've covered off on corn. I think the other star of the report today is clearly going to be soybeans, given the weather. Interested to hear what you have to say about soybeans. We'll kick it over to you now.
Thanks, Chris. Thank you for having me. Yeah, I mean, as we've talked about, the weather just hasn't been ideal in the last month. Go back to going into the August report. Things look great, but basically all of August and the start of September has been too hot, too dry. And what we see on soybeans is, you know, the pods fill at that time, and so yields are really impacted by that dryness. You know, if we look at where conditions have been, We're at 52% good to excellent versus 54% last week for the national soybean crop. Key states like Iowa, Illinois have all seen major drops in that condition rating, and so that doesn't inspire a lot of hope for that soybean crop. On the production side, obviously there's planted acreage, which the USDA said they aren't going to change for this report, so we're holding steady at 77.2 million acres. That leaves yield, and so in the previous report we were at 42.6. I think the average trade estimate is down to 41.2. Historically, if there's a drop on poor weather, you lose about 1 bushel to the acre. The biggest drop we ever had was 3 bushels, which is probably a lot bigger than we're going to get this year. That was 2003. My expectation is a little bit higher at 41.5. A little bit higher than the average trade estimate. That kind of rolls through to 3.1 billion bushels on production. The reason, I guess, for a little bit higher there, in my opinion, is there's not a whole lot of room on the demand side to ration lower to make that work. In the August report, we were at ending stocks of 220 million bushels, and so that's a 7% stocks to use, which is pretty comfortable. But if you take off, down to 41.5 or 41.2, you'd get much tighter for those ending stocks. So, if you look at the individual demand pieces, crush was 1.675 billion bushels in the previous report. I think you might lose 10 million bushels or so there. And then similarly on exports, we could probably lose about 20 million bushels. Argentina and Brazil are expected to have much larger production this year due to increased acreage there. It's just more economically the right decision for the farmers to plant soybeans, and so we expect kind of an increase in exports from South America, which can take away some of the pressure on the U.S., allowing that number to drop. Crush also, we've been crushing a lot for soybean meal to export, and so as the South Americans' production increases, that could also take away some of our crush demand. So as we look at the market response to that, I would expect that we drop down to about 5% stocks to use, which would be a lot less comfortable than what we were expecting a month ago. And so that's actually kind of baked into the rally that we've seen that Mike mentioned. And so what we at Beeson Associates expect is, a high was at 1409 on the November beans. And so if we get anything less than 41 bushels to the acre, we'd probably get back up to that level or higher. But if we're in that 41.2, 41.5, the market's basically expecting that. And so I wouldn't think there'd be a huge market response from the current levels.